up everybody, Nate here. And as of recording this video, the United States federal government has around $31.7 trillion in national debt, and that number is growing steadily by the minute. In fact, its debt is growing so fast that it may end up completely defaulting by June 1st. Now, a default of this nature has never happened in United States history, but we have seen what this has done to other countries across the world, as Pakistan and Sri Lanka have defaulted or gotten near to defaulting on their debts over the last couple of years, and it has caused absolute economic chaos. But the question is, can it really happen in the United States? Well, theoretically, yes. So today I want to talk about what this debt ceiling issue is all about, what can actually be done about it, and what could happen if the United States debt ceiling is not raised by June 1st. So what exactly is the debt ceiling? Well, the United States has had a pretty toxic relationship with the debt ceiling over the last 100 or years or so, ever since it was set back in 1917. Essentially, the debt ceiling is a debt limit that the United States has on borrowing and how much money it can actually print to pay back all of its debts. Think of it this way: when you go and get a credit card, well, you have a certain credit limit on that credit card and you can't overspend, or else you are going to get into some serious trouble with your credit company. And the United States government works the exact same way. They can only spend so much money before they start running into problems. So the United States government has set up a legislative debt ceiling that has to be passed by Congress every single time it is reached. In fact, the debt ceiling has been suspended or raised a total of 78 times since 1960. So pretty much Congress has decided to always raise or suspend the debt ceiling for a very long time. And like I said before, the United States has never defaulted on any of its major debts. But it basically remains there so that way the United States doesn't overspend or overprint too much money, essentially weakening the dollar or causing mass inflation around the world. Now, the second thing we need to go over is why exactly is this an issue? Now, you're probably thinking the United States government has been doing this for so long, so why exactly is this a problem now? Well, it really isn't a problem now, but it's basically always been an issue. The United States federal government runs into this problem every so often because, well, it pretty much runs a huge deficit in its earnings every single year. In fact, the United States government typically runs a $1 trillion spending deficit every single year, so that means it needs to print money and it needs to borrow money in order to pay back all of its debts. And the reason for that is because you got to think about how the United States government or any government around the world makes money. The only way that the US government can get money is if it borrows money, if it prints money, or it gets a bunch of money from its tax-paying citizens. Well, the United States government pretty much never is able to get enough money in taxes because nobody in the United States wants to be taxed that much to cover all of the United States federal spending. So we run into a huge deficit, and that means that the Federal Reserve has to print a lot of money, and that's why we typically continue to see inflation every single year, among other reasons. Now, the federal government doesn't want to cause that much inflation, so then it goes out and borrows the rest of what it needs. One thing you have to keep in mind here is the United States dollar is the reserve currency of the world, so other countries want to take on our debt. They want to loan us money because in exchange, we give them US dollars, and the US dollar is extremely strong because the United States federal government and our economy and our markets are extremely strong and stable as well. So governments want to hold on to our money. In fact, around 60% of all reserve currencies around the world are US dollars, followed by the euro. One of the main misconceptions about the debt ceiling is this is just an overspending issue. The United States federal government overspends, and what it needs to do is get together to figure out how it's going to cut its costs or how it's going to raise taxes in order to not reach the debt ceiling. Well, I'm not saying that it's right, but there is a reason why the United States federal government and the United States in general spends so much money every year. The United States is the world's largest empire, which means we have a lot of territories, we have a lot of military, and with that comes a lot of protection, and with that protection comes money. So we have to continue to borrow and we have to continue to spend in order to protect ourselves here at home, but also all of our assets all throughout the world. Not only that, but we have things like Social Security and Medicare and infrastructure here at home and across the world that has to be paid for. And in order to continue to advance, you have to get more money, and the more your economy grows, the more money needs to be pumped into the system. So it's not simply an issue of we just need to cut back spending, because that's never really going to ever be solved and hasn't been solved in United States history. In order to keep our economy stable, well, we have to keep taxes at a certain level, and we have to keep our printing and our borrowing also in check. And in short, because of all of this spending that the United States has to do, because it is the world's largest empire, well, well, its debt continuously outpaces the debt ceiling pretty much every other year. So we continue to hit this debt ceiling level year after year after year. Next up, what exactly would happen if the debt ceiling is not raised or suspended? Well, the first thing that could happen is borrowing costs for Americans and for investors and businesses across the world would essentially go way up. What would happen if the debt ceiling is not raised? Well, that would make the dollar really weak, and that would mean that a lot of people can have access to the US dollars really easily, and demand for spending in it would go way up, but that would also cause inflation, and it would cause the value of those dollars to go down. So the Federal Reserve would raise its interest rates, making it really, really difficult for people to borrow US dollars, making the US dollar a little bit stronger, but that just hurts businesses, and it hurts consumers, and it hurts our own economy because now nobody is able to spend any money. Immediately, US debt would become a whole lot more expensive to pay off. This is part of the reason why the Federal Reserve likes inflation in the first place, and it likes to actually continue to print money time and time again. So every single time you have inflation, that means the value of money goes down, but it also means that any debt you've taken out, if it has a fixed interest rate, well, then it essentially gets a lot cheaper. You could say this about your mortgage. If your mortgage is $1,000 every single month, but you have a fixed interest rate, that means the amount that you're going to have to pay on your mortgage is not going to change over the lifetime of your loan. And if you have a 30-year mortgage, that means you're still going to be paying $1,000 30 years from now like you are today. Except for 30 years from now, $1,000 is going to be worth a whole lot less, making that debt a lot cheaper. And this is what the Federal Reserve does in order to try to pay off a lot of its bigger debts. It continues to print money, so that way that debt gets a whole lot cheaper. Now, this would also have rippling effects throughout the US economy and world economies, because like I said before, if the United States government defaulted on its debt, well, it pays for a lot of infrastructure, and people rely on US spending in order to spend money. So immediately infrastructure spending would go down, contract workers, anybody connected to the US federal government would no longer be able to spend any money. So that would hurt pretty much right off the bat, and millions of people could potentially lose their jobs. Not to mention financial markets here in the United States and across the world would immediately take a hit. Part of the reason why people invest in US Treasury notes is basically you're giving money to the federal government, and the federal government is going to pay you back in interest over time, and it's seen as one of the safest investments ever because the United States federal government and its spending and its economy are not going anywhere anytime soon. So while you might not get a huge return, the return is almost guaranteed. Well, that return almost would not be guaranteed because now the federal government doesn't have the money to pay out the interest on any of those treasury bonds, causing a huge sell-off of treasury notes all throughout the world. Again, hurting the amount of money that the federal government can spend. Not to mention the United States credit rating and our trustworthiness with credit would basically plummet as well, as no other country is going to want to hold US debt because they don't know if we can pay it back. No country is going to want to invest in US businesses because nobody knows if the US government or its economy is stable anymore because they have this huge financial problem. So basically, failure to suspend the debt ceiling or to raise it would create catastrophic consequences for financial markets and our economy. Now, on the flip side, what exactly would happen if the debt ceiling is raised, and what exactly can be done right now? Like I said before, since 1960, we have raised the debt ceiling a total of 78 times, and we have suspended the debt ceiling 7 times since 2013. So basically, it would be more of the same. The United States government would continue to take on debt, that debt ceiling would continue to raise, and we'd probably be talking about this again in just a few years. This is always going to be a hot topic issue in the United States because the US has taken on so much debt that it cannot possibly expect to reasonably pay off this debt at any point. And that's kind of the point, and it's why other countries are okay taking on our debt. Remember, the United States is the reserve currency of the world, which means it is extremely valuable. So other countries want to hold on to US dollars, and they want to hold on to US securities. What this does is make those countries a whole lot richer. They can now reinvest into their own countries because they're using really strong currency that pretty much everybody wants. And it's guaranteed payments as long as the United States continues to raise its debt ceiling and it continues to print more money and it continues to pay all of its debts. Well, now all of these countries have guaranteed income. We're talking about countries like China and Japan and many other nations that hold lots of US debt. But the main issue of concern is, when does it become a problem? Nothing, and I mean nothing, can go up forever. We're talking about our economy, we're talking about the stock market, housing housing market, you name it, at some point, something is going to collapse along the way. That's just what history tells us. Every major empire in world history has gone down a similar path where they've had this huge amount of debt. They've had this huge military presence all throughout the world. They've owed pretty much everybody, and it's because they were the reserve currency of the world, and pretty much every empire has fallen because of it. So what we have to consider is how much is too much, and to be completely honest with you, I don't know the answer to that, and I think that what it ultimately comes down to is the strength of our economic system, and we're starting to see some pain points in our economy right now, like with the banking sector and the stock market and the housing market. We are seeing a big disparity between the haves and the have-nots, the wealthy and the poor, and the gaps between them are only getting wider. These are big problems, and they cause empires to fall over time. Eventually, all of this gets way too expensive for a country to pay off, and that's how it falls. So how much longer can the United States go down this route? Well, I have no idea. Now, what exactly can be done about this? Well, Congress can do what it's always done and vote to suspend the debt ceiling or just raise it. There are some pretty crazy options that have pretty much never been done before, like Biden could actually mint a $1 trillion platinum coin and send that to the Federal Reserve to be approved by the Treasury Department, but that would just create a ton of inflation all at once, because now you have created a lot of currency pretty much immediately and out of thin air. President Biden could also invoke Section 4 of the 14th Amendment, stating that the United States federal deficit and debt shall not be questioned by the United States or any other country around the world, meaning that even though we have all of this debt and we have passed our debt ceiling, it's not a big deal. But it would be a big deal because other countries would still see that, and they would see that we're not able to pay back our debt anymore and that we're having financial problems. So that would create a big reputation issue for the United States and its credit. Like I said at the beginning of this issue, the United States has had a toxic relationship with the debt ceiling for a very, very long time now. But mainly what you have to understand about the debt ceiling is Congress mainly uses this as a negotiation tactic. Democrats and the Republicans, well, they want to be the ones on the right side, right? So they want to be the one to use this as a talking point to bring down spending and to talk about how we are overspending on things that we don't need to in our economy today. And they want to paint one side or the other as the bad guys, saying that they don't want to raise the debt ceiling or they don't want to lower it because they just like spending way too much money. That's why we still have the debt ceiling in the first place, because Congress continues to keep it around as a negotiation tactic. They will basically say that they're going to shut down the government. Basically, Congress threatens that if one side or the other does not pass some bills or some legislation that they want, then they will basically make sure that the government gets shut down and not raise the debt ceiling. So again, it's more of a negotiation tactic than an actual issue in the United States, because more than likely the United States is going to vote to suspend or raise the debt ceiling, because like I said, if they didn't, that would cause catastrophic consequences, and it would basically affect us as the world's reserve currency and empire basically overnight. Congress doesn't want that. The president doesn't want that. The stock market doesn't want that. So when it comes to trillions of dollars, Congress is most likely going to raise it or suspend it. Obviously, that is not a guarantee, but when we talk about national debt versus your own personal debt, remember, they are very two different things. June 1st is coming soon, and by then, the United States government will have something to say on this debt ceiling crisis, but I want to hear what you have to say about the United States and its debt. Do you think the federal government is taking on way too much debt and that it should definitely look at its spending and try to figure out where to cut back? Or do you think that the federal debt issue really isn't a big issue at all and Congress is just using it in order to get bills passed? Let me know what you think in the comments below. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.